prospect, but will any of those really help to plug the massive deficit, the black hole we've got in terms of public finance? Well, actually, they do more to stymie the ability of the economy to regrow. Well, let's talk to Alfie Stirling, who's head of economics at the New Economics Foundation. Good morning to you, Alfie.
Good morning.
Well, a little bit earlier, we spoke to the head of the Taxpayers Alliance. They're absolutely convinced that actually putting taxes up is the worst thing we could do right now. But what do you think?
Well, on a very rare occasion, I do agree with them that right now tax isn't the priority. So you talked about, covering a black hole in the public finances. In reality, that's not needed. You have deficits during recessions, just like you have radiators turning on in winter. You need it in order to keep things ticking along. And when things start to recover, deficit will start to fall. But we do need tax rises, probably in the short to medium term, to start to address some of the underlying problems we've got with our public services. So an ageing population will bring greater costs onto social care, onto the NHS. We also know from the experience we've just had that if our NHS is run right at the top of capacity for 10 years with resources taken out, that makes us incredibly vulnerable to pandemics. And that's something we should be addressing as well through taxation. So yes, an increase in taxes, and I think the ones that we've identified are a good place to start, but actually the immediacy isn't correct. We don't need taxes right now. Deficits are fine. There's a way to manage recession.
Let's let us climb out of this first, because that's the thing. A lot of companies are saying, look, we're barely functioning right now. We've only been able to survive because of the furlough scheme or because of, mortgage holidays and rent holidays and the like. And if you start hitting us when there is any inkling of a profit in that tax year, say the corporation tax goes up, then we are going to be in a situation where we're not going to be making up for those losses that we've had this year. Even the companies that are going to be making profit in the next year or two, hopefully, they're going to just be simply recurring the years where they have been absolutely devastated.
That's right. And, if you look at the current crisis and the response government has put in so far, it's actually proportionately much smaller than we've seen both in other countries and in previous recessions. So if you look at the analysis from places like the Resolution Foundation, the New Economics Foundation where I work, there's actually a missing stimulus in the economy of about £90 billion a year. And that's partly because we can't cut interest rates. So government should be investing a lot more right now. That's the opposite of taxation. Having said that, I think there are some really important inequities in the tax system that are the first place to go when we want to raise more revenue. So, for example, I don't know if listeners are aware, but if you were to earn an incredibly high amount of money, like £100,000 a year, but if we took that as an example, if you earn that through PAYE, so a normal day-to-day job, you'll pay about $40,000 of that in tax. But if you pay yourself in dividends from a company that you own, it's $30,000. And if you pay yourself in capital gains because you kept that income in your company and then sold the shares, you'd pay $20,000. So for the same £100,000, you're paying radically different amounts.
I'm going to I as someone who doesn't have a PAYE job, I have to say one of the crucial things there that I often hear this whole, they only pay 30% tax rate, people who do that. They also, the money they don't pay themselves, they also pay corporation tax as well. So actually, when you actually look at how much tax those people pay, and I know because I'm one of them, actually you don't actually end up paying much less than anyone else, and you do that without having without having sick pay or holiday pay or, God forbid, at 52, maternity pay, all the benefits that an awful lot of other people have, you don't get, and you pay less tax as a result.
So 2 points there. So your second point, I think, is valid. There's a discrepancy between the welfare people receive, and I think that's actually being normalised through time. And through this pandemic, we've seen the self-employed actually receive comparable support to employees. But you're right, historically there's been that discrepancy. I'd say that's disappearing. Your first point, I'm afraid, is incorrect. So if you're a PAYE employee, then you've also had corporation tax paid on the income you make for your company. So all companies pay corporation tax. It doesn't matter whether they're...
It doesn't come out of your wage packet. Come on.
Economically, Julia, it's the same effect. But actually it's even more because you pay employee national insurance as well. As a company that has POEs.
All I'm saying is I'm getting very excited about the idea of holiday pay. That's something I've not had for 10 years. That would be great fun. Right. This thing, there are lots of changes that have been mooted, and again, we don't know whether any of these are actually going to happen, which ones or to what extent. A lot of these things are often kite flying exercises, see what the reaction is, which ones people are most upset about. Or you put out like, oh, we're going to raise corporation tax to 24%, then you do it to 22%, everyone goes, oh, thank goodness for that. It's a way of handling the reaction. Also, of course, this may well have been put out by Number 10 to say, look, we're trying to stop tax rises, isn't it terrible? The horrible, nasty Chancellor wants to do this to us. We don't know. But there are some that people will be very much in favour of in terms of things like, I think, pensions tax relief cut for high earners. We know that this is something that people on six-figure salaries are able to use as a way of basically avoiding paying tax on an awful lot of their money. They're able to siphon it away into their pension simply because they don't have to, they don't have to live on all the money they earn because they earn so much. So there's some things like that which have been anomalies that really only benefit the very wealthy.
That's right, yeah. I mean, I would argue the points I was just making around discrepancies are also anomalies, and others would too, I think. But yes, you're quite right on pensions tax relief as well. I mean, we have a progressive tax system, the idea that as you earn more money, you pay proportionately more tax, and that's to make sure that we spread the burden in a fair way. But of course, if you get tax relief then on the amount of money you put into your pension, the tax system works in reverse. If you have higher earnings, you have a greater relief, and that's an anomaly, and it's against the principle of a progressive tax system in the first place.
Yeah, indeed. In terms of the, just finally, issues like, say, the triple lock on pensions, that's a big issue. That was something that's been promised since David Cameron's time, isn't it? This idea that pensions will go up, basically the average wages increases, prices, or 2.5%, whichever is the highest. But we could see a situation where there are no pay rises for most people this year if you're lucky to keep your job, but you're looking at pensioners getting a 2.5% increase and saying, look, this is an anomaly where it's pensioners who've actually been, relatively speaking, doing better than lots of people on low earnings, a lot of younger people, a lot of families struggling at the moment, and this is an anomaly. Do you think that politically this is something that could be done?
So I think actually under both the new Labour governments and the coalition government, because of a commitment to support the safety net for pensioners, we've seen a massive reduction in pensioner poverty in this country. It was a huge issue at the end of the 90s. Over a decade and a half of reform, we've really successfully addressed it. Obviously, it's not a job done, but we've made huge progress. Where we haven't made progress is on working age poverty, and the safety net there is now incredibly weak and has been eroded actually now for a couple of decades. I personally don't think the answer is to now start to try and push pensioners into further poverty by taking away their safety net in order to pay for working age. I think we can and should be raising the taxes to provide a similar safety net for those of working age.
Alfie Stirling, thank you so much for joining us, Head of Economics at the New Economics Foundation. Very much appreciate that. Right, let's talk